Oil bulls are waiting for Brent to settle above the level of $29 per barrel, as it will serve as a strong positive signal for them. Today, oil market remains under pressure despite the overall improvement of risk appetite. The ruble is trading in the red after showing some signs of uptrend in the morning trade. Traders' optimism rose on positive news from the United States. It was reported that a drug trial against coronavirus turned out to be successful in one of the Chicago-based hospitals. Besides, the U.S. government is planning to gradually lift the restrictive measures in the country. Both the ruble and the oil were slightly advancing in the early trade following the rise in risk assets. Still, the negative factors outweigh the positive background, as oil traders are mostly focused on the monthly outlook for oil from the OPEC. The cartel has cut its forecast for the global energy demand and expects it to drop by a record 6.8 billion barrels in 2020. The downbeat economic data adds to the market pessimism. Experts fear that economic activity in other countries will recover at a very slow pace, judging by the situation in China. For instance, retail sales in China plummeted by 15.8% in March, which hit almost 20% of local small businesses. This means that oil demand will revive much slower than expected, so Brent crude is unlikely to settle above $30 per barrel soon, even amid unprecedented output cuts introduced by the OPEC+. However, oil prices were slightly up on Friday as Russia and Saudi Arabia hinted at further production cuts. In Asian trade, oil quotes were moving higher, but later gave up the early gains. Traders remain skeptical that the OPEC+ deal on cuts will alleviate current oversupply in the market. Crude prices will remain low until there is some clarity on when and by how much non-OPEC+ countries will chip in with additional production cuts. International Brent oil futures are trading mixed near the level of $28 per barrel. West Texas Intermediate crude dropped below $19 per barrel, its lowest settlement since 2002. In the early session today, WTI was trading deep in the negative territory, sliding to $18.40 per barrel. The ruble was trading with gains in the morning trade amid the overall optimistic mood. The Russian currency managed to reach the mark of 73 against the US dollar amid increased risk appetite. However, the ruble bulls failed to sustain momentum and the US dollar regained its ground. The dollar-ruble pair finally went above the mark of 74. It seems that today the ruble is less sensitive to falling oil prices and is ready to react to any external positive news. Amid the negative dynamics of other assets, the ruble looks much better thanks to its high profitability. This may be the main reason why the ruble is still holding steady in the range between 73 and 75 against the dollar. Only a sharp drop in oil prices may negatively influence the ruble's trajectory. On Friday, traders will closely monitor the press conference of the head of the Russian Central Bank. Market participants hope to get any hints at whether the key interest rate will be lowered during the next policy meeting. The peak of the tax payment period in Russia falls on April 27, but the ruble won't probably get any significant support from it. The volume of currency sales is expected to be lower than usual given a drop in oil prices. You were watching Market News on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.